following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, serve the one you love. To serve your love to your lover. Every kiss and every touch, you feel you to please the one you love without expecting anything back. Market wise, let's take a look at it out here. We have the Dow Industrials down 254, Nasdaq off 72, S&P's down 22, gold contract up $18.50, trading at $13.48 an ounce. Silver up 19 cents, $18 an ounce. Platinum flat at $1,008 an ounce. Interesting, platinum can't catch a bid when we get the gold and silver moving with conviction. Copper flat at $3.12 a pound. You get the light sweet crude market catching a bid up $1.38, $48.67 a barrel. And we'll see this Irma is coming bearing down on the U.S. and particularly on Florida and this Gulf Coast, folks. If that baby does come up to the Gulf, it's going to be trouble in paradise. It is a monster. 10-year note. 10-year note up 23 ticks, 127.21. 30-year bond up almost 2 points, up a full point, plus 26 ticks, 158.09. They're both moving with conviction, wide price spread, have the volume behind the move. Bottom line, they want to get to the highs of November. Right now, what we have done on the 10-year, 10-year is laying out here 2.068, folks. And that's the low for the last 6 months. When we take a look at the aspect of where we are in the year, we're just slightly, the low for the year is 1.534, the high is 2.6. So bottom line, they continue to buy these notes, buy these bonds. King Dollar's down 514 ticks, trading out at 92.255. Just can't catch a bid. If you take a look at King Dollar, what you're going to see out here is that twice last week we rejected lower price. Well, first off, you're inside a confirmed ABC structure down that we haven't hit the price projection yet, and that's 90.019. We hit 91.550. We did that on the 29th. Now, when we did that, the volume was too high. You got a little dead, well, not even a dead cat bounce because the dollar hasn't been able to do it. But at bottom line, you get down to a low of 51,000 contracts. You bounced with 38. You came back down again with 44, and now what's going on is that we have 26. That being said, we're rolling at a contract right now, so I expect, number one, what you're going to see is that, yeah, we're going to at least go after the low of this 92.050. We got next to it out here today. It looks like it's just going to hang right there. It's going to wake up in the morning. It's going to have more strength, and more than likely, I suspect what we're actually going to see is that it's going to go right after that low once again. We'll see whether we get that expansion of volume. The euro is trading at 119, and the yen is at 108.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we're down on 63 million shares. You're coming into 62 million, so you're down on volume. We got to a low out here today of 244.95. Right now, you're at 245. 74. So if we do the SPY first, what you're looking at inside the SPY right now is, let me just get that back up there for some reason. There we go. So what you have with the SPY is this, is that the SPY, you're laying out with a high volume low there at that 244.97. And when we did the counter trend bounce, you're going to see something that's pretty wild. I'm going to put the future up because when the downdraft actually came out of nowhere on the way down today, but when you take a look at this, what I mean by out of nowhere is that all of a sudden the market just blew apart. The market blew apart right at 10 past noon. But if you take a look at this, what you're going to see is that from the high to the low, we did a 0.382, just over 0.382. A 0.382 would have been the S&P going to 2455.38. We got a counter trend bounce going to 2457.50. What I expect we're going to see now is you're going to see more pressure coming into the close, and we're at 2453. Now, 2451.50, which is a 1.5. If we get into that bar, which I think we're going to, you get a point into that bar, guess what? You're going to sell right down into this close out here today, because the bar itself, the low of that bar, does have high volume. So if the top of that bar can hold and you get lighter volume, then then that baby will hold. Gold contract. What do we have with the gold contract? Gold contract today up 1720. Monster volume, folks. You get 534,000 contracts. Bottom line, people just keep trying to sell gold, and guess what? They got to keep closing those positions. Huge move out here today. If we go take a look at the continuous contract, what you're going to see, there's not much in between where we are right now and this 1377. It looks like the 1377 wants to get hit. Now, what I do expect is that when we get up to the 1377, it would make sense that gold would be like a little tired, because this has been a one-way trip. You know, we were at 1204 July 14th. So this has been a one-way trip. This is taking a lot of energy to get up into this level. So we'll see how this shakes out. But I do expect you're going to get to that point. If we go look at the GDX, when you're going to see the equities themselves, bottom line, they have force behind the move out here. The GDX has taken out its swing point from April, which is $24.88. 59 million shares. We've already done 40 million. The GDX in general puts big volume in at the closes out here. This thing is going to be over the 59 million out here today. And bottom line, let's see. Let's bring this back a little bit further. So you got, this is going to be pretty cool. So next stop after this 25.71 is right to the high, which is a 31.79. The gold, the XAU, the HUI, let's go to the XAU first. XAU, that's just launched the swing point of 90.82. You're at 92.09. You're up $1.55. We'll get the volume tonight at approximately 8 o'clock. And the Gold Bugs Index, that's up $4.14. We're at 217.22. That is also taken out its April highs. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 232. You get the Nasdaq off 64. S&Ps are down 19. Let's go inside the indices, see what the strength is versus the weakness. Inside the Dow Industrials out here, you have the weakness. You got Goldman. Goldman's putting 56 negative points. That's down $8, trading 217. This little baby, Goldman is the one who rang the bell at 255, folks. It's pretty intriguing. When you actually take a look at this, when I talk about ringing the bell, specifically, this was the first equity that was off the high, and that was a long time ago. You're talking in March of 2017. Come down with volume, gets down to the 213 area, then trades to 209, and then it hasn't been able to get over and stay over the 230. So this is coming down once again, and of course, this is all about interest rates and that interest rate structure. Well, a lot of it's about that. You also have J.P. Morgan's putting 16 negative points into it. That's down $2.41. Boeing's putting 18. You get Travelers putting 28. United Technologies putting 40. The leader, or the only leader inside the Dow Industrials today, you get Home Depot putting 13 positive points. Walmart's putting 9 positive points. If we go and we take a look at the NDX 100, so here, actually, let's look at the percentages first. So percentages go like this. The Dow's down 1%, the S&P is down 0.8%, and the NASDAQ is down 1%. The NASDAQ played catch-up in a big way. The NASDAQ was the strongest index this morning when the Dow was down. What has happened since then is that Viacom's down 4%, Liberty's down 4%, Qualcomm is down 3.9, and Fox is down 3.7. The big networks are getting smoked. That's how that thing is shaken out in a big way. The leader out there inside the NDX 100, you have Seagate Technology. That's up 2.9%. O'Reilly Automotive is up 1.5%, and you got Intuitive Surgical is up 1.49%. Let's go to Vicky in Houston. Hey, Vicky, what's going on?
Hi.
How you doing?
I'm doing fine. How are you?
I'm doing good. So you made it through the storm. You poor folks down there. Oh, my God.
I was lucky.
But thank God. Yeah. So in Houston, right, I mean, there were a lot of things that didn't get flooded, but then there was the floods were extensive extensive when they did get flooded, right? Is that how that thing shook out?
Well, it flooded all over, just in a few different spots. I just didn't get flooded. I guess I'm high.
Okay, cool. Thank you. That's beautiful.
Lucky, but-
Yeah, big time. So what are we going to look at?
I bought GOLD
Okay.
back in for $71, and it's up to 105 now. And I don't know if I should sell it or keep hanging in there with it.
Okay, so let's take a look at it. You got the symbol GOLD is Wrangell Resource. The low for the year is 67. The high is 106. Okay, so this is a strong stock, big time. Let me see what we got here. So you took out the swing. You took it out with volume. Yeah, no, I'd stay right there. I mean, this looks to me like it's going to go 118, 126.
Oh, good.
It wants to go after that high. That's a high volume high from 2016. Looks like it's going to go after it. If you want to see something intriguing, folks, if you look at Franco, Nevada, even last week was at all-time highs, and that's an indication that the physical metal is going to continue higher. Royal Gold looks like it's going to go for its all-time highs. Both of these, of course, are the royalty stocks, and they give you kind of an indication of where the metal wants to go. And so I would stay right there. There's no reason you can't bring your stop up and put it somewhere under 101, Vicky. Because if it gets down into that gap, there's no sense giving up $30. That's beautiful. I mean, do you know what I mean? So.
Okay, put the stop at about 101.
What I would do is this: put the stop at like 99. What I'm doing is this. Okay, so this gapped higher on the 29th. On the 28th, the high of the 28th is 100.6, $100.06. Put it like 98, just 98.45 or something. 98. Okay. I'm just picking out a number underneath where that strength is, because it'd be hard to get in there. And if it gets in there, then it would go low, and that's still going to give you a good almost $30 profit. Yeah.
Yes. Okay.
Cool. Well, I'm glad you're safe. I'm glad everything's okay, and we still gotta.
I hope you're safe in Florida.
Yeah, this is going to be. We started getting ready this morning. We started getting ready yesterday, actually, but yeah, we haven't had a big storm for a long period of time. So, being in the probability business, we know that we got to, basically get ready. And if you're watching Tiger TV, folks, I'll put this up, and every time I look at this, and this just keeps getting. It's almost seems like any place in Florida, folks, is going to get hit here. Just imagine how hard we're going to get hit, because the way this is laying right now, if you happen to be watching Tiger TV, it doesn't look good. So we'll see how it shakes out.
Looks bad. Well, good luck.
Okay, thanks so much. Have a great one. Have a safe one.
You too.
Thank you.
Okay.
Yeah, I know that's right. South Florida, no matter what happens, and you know what happens is that let's see if I put this storm up here again. What you're going to see is it'd have to really go really west, but then it's really even worse if it goes really west, because if it goes really west, it's going to go right into the Gulf and go up to Louisiana. Right now, what normally happens is that a high normally pushes it to the right, and what is happening is that there's a high to the east that is keeping it down. That was the latest in, the Weather Channel when I was watching this morning. That's what's actually keeping this thing down. So, still quite a way away. But bottom line is that this is a monster. In fact, if you look at this is crazy. When I read this, so the way that Bloomberg is putting it, Irma has topped the scales that measure storm strength as extremely dangerous. Systems churn towards Florida with prospect of property losses that could surpass Hurricane Katrina. Oh, I didn't read that part. Great. Insurance stocks are the biggest decliners in the S&P 500 as Barclays estimated losses in the worst-case scenario at $130 billion. Irma comes on the heels of Harvey on August 25th. Let's see. So right now, were Irma to hit Miami with the same force as a Category 4 storm that struck in 1926. Insured losses would be 125 to 130 billion. Overall losses from Katrina reached 160 billion in 2017 U.S. dollars. Yeah, the way this is shaken out. So what you did have, Florida is the world's largest producer of orange juice after Brazil, with most of the state's crop located in the lower two-thirds of the peninsula. Yeah, if you want to see orange juice futures, I think they didn't go up limit. They went just about up limit. So 145 was the limit this morning, I believe. No, oh, look at this. They missed it by 146.50 was up limit, and they went up 146.40. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow Industrials are down 233. NASDAQ is off 64. S&Ps are down 18.5. We're going to be right back.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 217. Nasdaq's up down 58. S&Ps are off 16.5. Let's go over there because that's just got a little burst. So you just got a little burst in there. And we'll see how much they can do. Bottom line, you're down 16. We're at 24.58. That's 13 points off the low of today. The low of today was 13.45.50. If we go over to Norwegian Cruise Lines, NCLS, this isn't that bad. You know, the headlines out there that, yeah, the cruise ships are down, but for the context of you're talking about NCL, no, Norwegian, and let's see. Sorry about that. I'll get this up, folks. Okay, let's see. NDX. Yeah, for the amount, where is she? This she is. Okay, so Norwegian. NCLH. So it's down $1.97. It's not bad. It's, you know, it does have a high volume low at 54.15, but you know, for the aspects of between the Caribbean and this whole coast right here, that's not that bad. I would not want to be in one of those big, I wouldn't want to be in any boat out there. That's the bottom line. Never mind one of those big tubs. 877-927-6648. Let's go over to the bond market. We take a look at the TLT. So TLT, which is a 20-year bond plus fund, that is trading up $1.89. You talk about pushing a swing point with volume. You're pushing it with big volume, folks. So your last swing, which is the June 26th high, 128.57, had 5.5 million shares. Last week, on the 29th, we pushed in with 7.6 million. We're pushing in today with 10 million. This thing could blow this thing away. And if I bring this up, oh, this is interesting. So yeah, this very well may be one of the first ones at the November high, 131. That's going to be impressive because that's where these markets, the bond markets in general, got taken apart. That everyone thought that, okay, there's infrastructure bills, there's this, there's that, there's going to be all this money being spent, interest rates are going to have to go up. Well, guess what? Never happened. I think money's going to be spent, but unfortunately, it's going to be spent, well, not unfortunately, it's going to be spent to help the people in Houston, and hopefully it'd be nice if the storm went the other way and we didn't have to worry about that. But if we get a double banger coming in here, that's going to be pretty intense. Let's go over and, as our man Duffy says, take a look at some of the insurers. Take a look at Travelers. Travelers is getting hit. Travelers down $4.50, and oh yeah, this is serious business. So Travelers is off the high of 130. This is crazy too. So this had a high volume low at 117. It had been making its way down there, by the way, too. It closed on Friday at 119.67. It's taken this out today, and we'll bring this back. Oh, look what it has. Yeah, this has another high volume low. Yeah, this is going down to, you got 110 to 103. And this has been an incredible stock, actually. You bring it back to 2008, it was at $28. It goes all the way up to 128. Let's see, it pays 2.49% as a dividend. Yeah, but that is saying that the market's worried that they're going to be paying out some bread. Let's go to, let's see, what other, Travelers is the big one. Oh, we can go to Chubb. That's right now down 348. There it is. CB, okay. So CB, yeah, it's down in volume too. So that's going after, which totally makes sense, by the way. You know, life can be great until it's not. And for the insurers, that's what it looks like it's going to. This also had an amazing run. 2009, it's at $30. Last month, it's at $150. Now you're dealing 137. So you got a lot of things happening simultaneously out here. There's no two ways about that. Let's go take a look at the yen. So the correlation, of course, inside the yen and gold, bottom line, stronger the yen keeps getting, stronger gold keeps getting. Right now, the yen is at 108 to the U.S. dollar. We're at the bottom of this consolidation that the yen has been in for quite a while. So this is going to be a big number to keep your eye on. And this is what it is. It's 108.13. We were down there on the week of the 21st of April. We were down to 108.27 last week. And right now you're at 108.72. You know, you break that, next stop is really 99. 99 to par at 99 to 100. And that, it looks like that whole thing's going to set up because the way that gold is trading, the way the bonds are trading. Bonds are trading, folks. Listen, these interest rates not only low, they're staying low. And if you want to see something on top of that, let me see if I can find his cash carrying. So check this out. Federal Reserve interest rate increases may be doing real harm to the U.S. economy, which would help explain why inflation is low and job growth has slowed, said Minneapolis Fed President Neil Kashkari, one of the central bank's most dovish policymakers. The amazing part, that statement, folks, is pretty intense because they've only gone up 2 times, each time 0.25 basis points, which is very small. So it's amazing that he is saying that, you know, that the Fed is already wrecking the economy. But let's read through it. It's very possible that our rate hikes over the past 18 months are leading to slower job growth, leaving more people on the sidelines, leading to lower wage growth, and leading to lower inflation expectations, Kashkari said Tuesday during a talk at the University of Minnesota in Minneapolis. These premature rate hikes that we are embarking on, they're not free, and I think we need to remind ourselves of that. Kashkari has been an outspoken critic of the Fed's drive to tighten monetary policy since he took over at the Minneapolis Fed in 2016. This year, as the first-time voter on the U.S. Central Bank's rate-setting Federal Market Open Committee, he dissented against otherwise unanimous decisions in March and in June of this year. Hey, we'll see where this whole thing is going to shake out, but it's pretty wild in the context of where rates are now. The bond market itself are bringing rates down and bringing them down substantially and pretty quickly. Right now, the Fed Fund futures does not have us going over 50% possibility of an additional rate hike until June 13th, the June 13th meeting. Oh, look at that. No, this is amazing. So these came down again. No, it's not even June 13th anymore. Now we're off to September of 2018. June just went from 54% to 48. That's wild. You stay right there, folks. We'll be coming right back. Dow Industrials are down 236. You have the NASDAQ down 63. S&Ps are off 13.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow down 240, NASDAQ off 66, S&P's down 19.5. We take a look at the volume inside the indices out here. Right now, you're at 576 million on the NYSE. That means we're going to be into about 850, so that's down on volume. NASDAQ Composite, we're at 1.5 billion. That'll get up to about 1.8, 1.9. That says we're down on volume also. The IWM, down with 18 million shares. That's not that bad in the IWM also, by the way. That needs higher volume to sustain lower price. SPY, the SPY, what you have with the SPY, this is down on higher volume. 70 million shares, that's coming into 62 million. That's, I suspect we're going to go right after that 241. Right now you're at 245. If we go take a look at the diamonds, diamonds are off this high, and you get that big volume with the diamonds. Diamonds are at 2.6 million. Your lowest swing point is 3.4. We haven't reached it yet. I expect we're going to go after that lowest swing point, though. That's the way this seems to be shaking out right now. So much for window dressing, too, by the way, folks. We are in window dressing right now. Excuse me. But what you have out here is that, 12 o'clock this afternoon, bottom line, market got spooked. They sold it down. They sold it down fast and hard. If you want to see that sell down, the Dow had been down, a good 100 points, but the other S&P and the NASDAQ wasn't. Then all of a sudden, an operator came in right at noon, and they basically sold some contracts into this market. You had 83,000 contracts in the S&P futures sold, and then bottom line, they just kept selling them. So we'll see how this shakes out. What we do have is that you just bounced to 24.58.50, and try to get into that bar. And the volume wasn't bad here. It was 46,000, but guess what? You're going into 83,000 at that level. So what we did see that past week also is that you saw at the close 2 separate days that you had some real selling come in this marketplace. Now, come visit us. Up in Boston, we are doing a live workshop, folks. So for all you folks in the Boston area, New England area, September 30th, Nadex is sponsoring a workshop. It's a free workshop. You're going to get a lot of great education. You're going to get a copy of my book, The Art of Timing the Trade, How Price and Volume Move Markets. This is at September 30th. It's at the Burlington Marriott. It's actually the Boston Marriott. It's in Burlington, Mass. Has a great radius, so whether you're in Maine, New Hampshire, Rhode Island, a good radius. This will start at 7:45 in the morning, 7:45 to 8:30. We have a check-in continental breakfast, 8:30 to 8:45. I'm Mr. Dan Cook from Nadex. We'll be having welcoming remarks. My son Tommy will be going over the spreads and the binaries from 8:45 to 9 o'clock. I'll be on from 9 to 10:30
Specifically, 90 minutes, I'll be going over quality volume, cause and effect, the ABC structures, swing points, and testing. We have a 15-minute break. Our man, Mr. Darryl Martin, will be up there for an additional 90 minutes, talking about the power of order prints, the power of key levels with volume accumulation and directional bias. And then both Darryl and I will take questions from 12:15 to 1 o'clock. So check it out, front page of TFNN, September 30th. Come growl and prowl with all of us up here. The VIX, let's go take a look at the VIX. So what do you have with the VIX? People need insurance right now in this insurance market, and that's just not in the market, folks. That's everywhere. And, you know, what does happen in Florida, probably happens everywhere, but when hurricanes come in, they stop writing insurance. So right now, the VIX is up $2.62, trading 12.75. The high out here today was 14.06. But you can see the elevation is staying up here, you know, and we'll see just, you know, the high of today was at, let's see, at 115. So that's kind of intriguing because what you do have is that you have the aspect that 12 o'clock the downdraft started. Hour 15 minutes later, they were paying the highest insurance premiums out there. And bottom line, it looks to me like you're going to stay with an elevated VIX for the next couple days. You know, what has happened in the past, no doubt, is that the VIX has popped up there and came right back just as quick. But as I said a few weeks ago, what we've had is this, and this is the. If we bring this back to May 18th, folks, what you're going to see is this. That May 18th was like the first warning shot coming across that the S&P wanted lower price. You know, 2 days we go down with heavy volume. Then guess what? Shakes it off, comes, you know, S&P goes from 235, the SPY, all the way up to 245. Comes down again, one day wonder, forget it. Goes topside again, hits 248. Now, from that point on, though, meaning that point on of September 8th, that is where the action really started. And what you had is this, is that you came down hard on the 10th with 120 million. You bounced for 4 days, 56 million. You came down to hard again for 3 days with even bigger volume. First time was 120. Next time was 128 million. You bounce for 4 or 5 days. We get to a high with 62 million. And we'll see where it shakes out today. But right now, you get 71 million. We'll probably do about 100. So that is lighter than the way that we did it. The key to wrap your head around here, these events, meaning on the way down, are happening quicker in between the amount of bounces that you do get and that we have got. If we go take a look at the composite, you're going to see inside the composite was a classic, man. The composite just almost touched the high, which is 64.60, I think. Yeah, 64.60. We hit 64.49. The composite. Now, the NDX did close at an all-time high on Friday. The NDX, the high that we're talking about is 59.95.70. We closed at 59. Oh, interesting. 87.90. Now, we didn't close at the high. We made the high, though. So that was a failure right there, too. Interesting. That was a failure on Friday. Light day, light volume day, but it doesn't matter. It was a failure because now what you're going to have, that you come off the high, and we're going to come off this high with volume. So we'll see how this kicks out. The gold contract, bottom line, wants higher price. The dollar is going to be the big deal even out here tonight. It took quite a bit of energy to get down into the area of this 92.225. But guess what? You're just in a whole nother trading range. I mean, this dollar just can't catch a bid whatsoever. You know, we go to the euro, the other side of that trade, and what you're going to see, the euro is just ready to launch. Well, it's 119.10. The further it gets away from that, the closer it's going to basically, well, the higher probability that's going to go to this 123 to 128 area. That's how this baby is set up right now. It looks like
Dollar wants dramatically lower price, euro wants dramatically higher price, gold wants higher price, silver wants higher price, bonds want higher price, lower yield. You stay right there, folks. We'll be coming right back. Dow Industrials down 240, Nasdaq off 64, S&P's down 19. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is off 229. You get the Nasdaq off 61. S&Ps are down 17. If we go take a look at the financials, folks, the XLF, this is down hard. You get a confirmed ABC structure on the way down. Pretty intense. It's like, okay, man, here we go. We're going south. Your A point is 25.59. Your B is 24.35. So you get about $1.20, which gives you 23.70. Price projection, 23.70, 23.81 is your next lowest swing point from June 23rd. That being said, what you do have inside these financials, it looks to me like we are going to actually go for, let's see, so we put this up. It's where we broke topside from, yeah. So 21.70 looks like where this thing is going to basically trying to make its way. The bottom of this consolidation is 22.90. And let me see if Berkshire finally fell apart, because Berkshire was holding them up. Yeah, there it did. Okay, so not fell apart. It's down $4, trading 176. But Berkshire, you know, bottom line, even though Goldman was pulling back, JP Morgan was pulling back. Berkshire wouldn't budge. And Berkshire is the largest weighting structure inside the XLF. JP Morgan, that broke its whole consolidation, broke it with volume too. So, the consolidation on JP Morgan started June 29th. Starts all summer long. It's been able to hang up there. But guess what? JP Morgan wants to trade to 83 to 81, which is the lows of May. Bank of America, BAC, let's see what that is. That's down on volume, nothing heavy, 79 cents. Citigroup, that's down on volume. Goldman is the leader in there. Goldman, that's down $8.24. You did 5 million shares. The swing point's only 2.3. Goldman's on its way down to this 209. Right now, you're trading 217.63. You stay right there, folks. We'll be coming back with more numbers for you after the close. Dow Industrials right now down 226. NASDAQ is off 60. S&Ps are down 17. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others,
Sure.
to, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Become a white magician. All the magic you possess is based on your word. You can cast spells all the time with your opinions. You can either put a spell on someone with your word, or you can release someone from that spell. I don't get this one. Pretty wild. Market-wise, let's take a look at it out here. We had the Dow Industrials down 234. NASDAQ off 59. S&P's down 15. Percentage-wise out here, what you got, you had the Dow down 1%, S&P's down 0.8, NASDAQ down 0.9. Gold contract trading up at a price point, up 12, where are we? Yeah, up $14.70, $1,345. Now, you had gold move with wide price spread, move with conviction. Yeah, $13.77. That's the swing point up in April. That's the way that baby's heading to. Silver also moved with conviction, up 14 cents, $17.96. That looks like it wants to run up to this $18.85 area. Platinum couldn't catch a bid. Bottom line, you're actually down $1.50, $1,007 an ounce. Copper flat at $3.12 an ounce. Light sweet crude up $1.25, trading $48.54 a barrel. Story out here today, besides the market coming down, besides gold going up, notes and bonds. Notes and bonds continue to be the story, folks. So, 10-year note goes up 22 ticks. The June high that we've been going after is 127.08. We're at 127.20. It's moving away from that whole area. And it looks that what this note market wants to do is get up and into the downdraft from November. 131 is the number. Right now, you're at 127.20. In November, folks, after November 7th, after the election, what you had there is that you went from a price point of 131, and you went right down to 127, kept going lower to 123. The whole world thought we're going to spend a lot of money, do all these bills, and bottom line, interest rates going up. Well, just the opposite happened. We take a look at the 30-year. 30-year, exact same type of setup. I mean, 30-year is also going after at the high from November. Right now, we're at 158.09, and 164 is the number. And the 30-year looks like it's going to hit it pretty quickly, by the way. The 10-year is trading at 2.07. Nice number. You want to buy a house, you're going to refinance, go do it, folks. So the low for the year is 1.534. The high is 2.6. We are at the lows for the last 7 months right now. You know, it hit it today, 2.070. Pretty amazing, actually. Bottom line, though, notes and bonds are strong. They're strong big time, too. King dollar. King dollar, folks, can't catch a bid. No one likes King dollar. They keep selling it down. King dollar had a chance to bounce last week, couldn't handle it. You know, you got down to 91.555, bounced. The bounce could only get it up to a 92.628, which is nothing. Bottom line, King dollar is in a confirmed ABC structure on the way down. You have a price projection of 91.019, and 88 is hanging out there. 88 is the highs from 2008 and 2010. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so the SPY today, come down, $1.78, 83 million shares. Now, that's not a lot of shares on the way down, by the way. You know, we did hit a high with 62 million. That was testing 61 million. Couldn't handle that. You know, so bottom line is that let's go to the so the SPY, that's not a lot of volume on the way down. Now, the indice, however, we did accelerate in volume. So that's saying this thing wants lower price. We did 907 million on the NYSE. We take a look at the Dow Industrials. What you're going to see is that Dow Industrials, they look like they're going to go after 21,600. Right now, we're 21,754. The composite also came down and came down hard. The composite down $59. That's not a huge amount, but what you also had inside the composite is that you got that expansion of volume. We did 1.866 billion. Bottom line, both of those structures are saying we're going to continue to lower. Now, we have window dressing that's going on. We'll see whether they can get any type of bounce going tomorrow. If they get a bounce going, folks, and you see the bounce on lighter volume, you make the choice. But that would be the sell as fast as you could, because the bottom line, this has been telling us for, bottom line, since May 18th, this market wants lower price. And as I said a little bit earlier on the first hour, is that each and every time between, when we came down to the lows on May 18th, market shook it off, went to a higher high. June 9th, down fast, market shook it off again, took about a month and a half to shake it off, though. And then from the 27th of July, however, these have been fast. You have had slow dead cat bounces. When you come down hard and fast. Slow dead cat bounce, you come down hard and fast once again. Gold contract, when you take a look at gold, bottom line, you get price spread behind the move, you get volume behind the move, and that is in all the indices, actually. In fact, if we look at the GDX, let's see what kind of volume they put in the GDX. Yep, 67 million. The GDX was going after its swing point that had 60 million. It took it out. That swing point being $25.70, no, 25, let me pull this back. 24.88. We had 659 million. We took that out today at 67 million. That's a nice setup. That's saying that the GDX now, let's see where we're at. This is good. GDX 2571 is the next stop. And you did this with force, man. You did it with force. So with force, this thing can go a lot higher. And the way that the dollar is trading, the dollar looks like it's just going to fall apart. The euro wants to go topside. And on top of that, the yen, folks, is at the bottom of its consolidation. So all these currencies, they're right at the bottom or the top of the consolidation. And in the yen's case, we're at 108.87. You break 108.13, guess what? We're going to be down to 100 once again. We get to 100 in the yen, that gold is actually going to go by 13.77. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 234, Nasdaq off 59, S&P's down 14.5. Let's go over to our man, Mr. Andy Heck, as we do every Tuesday and Thursday. Now, don't forget, folks, Andy's got a great show right here at TFNN. You can get it right on your cell phone. You go to TFNN.com. You just hit Tiger TV. You're going to get some great HD video every day, of course. Andy's on from 5 to 6 Eastern Standard Time. Andy also has 2 great newsletters. He has the Technometer Commodity Report. That is a daily newsletter. He has Daily Essentials. That is the Technometer Commodity Report is a weekly newsletter. He has the Daily Essentials, which is a daily newsletter. Now you can come over to our website at TFNN and test drive both of them right here, right now. The way you do that, you go to TFNN, go to newsletters. You'll see both of them right there. You can test drive them. And, it doesn't matter whether you trade futures, and we're talking commodities, folks, because these days, and has been for quite a while right now, there's an ETF for each and every future, and that's what Andy has in those newsletters. Andy Heck, what's going on?
Hey, how are you?
I'm doing good. How you doing?
I'm doing good. Could you believe the summer is over?
I can definitely believe it's over because we're getting ready for this hurricane, so we've been hustling since yesterday.
This one looks like a really nasty one, doesn't it?
I'm going to put this up for you as we're talking, folks, okay? When you see this, every time that I look at this, this is like, no matter where you are in Florida, okay, you better make sure that you buckle down. I've been in 2 bad hurricanes. I was in Katrina and I was in Hurricane Bob.
Oh, ugly.
And let me tell you something, folks. Hurricanes are intense. So
they're intense. My whole family had moved to Florida in the 70s. Great aunts and uncles.
Yeah.
And their houses were all wiped out by Hurricane Andrew.
That was when I was just reading about this. It looks like Hurricane Andrew was the last Category 5 to hit Florida. That's what
they lived in a place called Naranja Lakes, and it no longer exists.
Really? Wow.
Yeah, unbelievable. I mean, so you got to send white light out to everyone, to you and everyone down there, and hope that this thing calms down a little bit. I mean, my son just went through Harvey in Houston, and while he was okay, and he lives in the center of the city, it's just unbelievable. He was okay. He and his wife spent last week working at the convention center, helping people out.
Nice. Yeah.
So, yeah. But it's gonna be a rough one, and there's so much going on now that affect commodities. These weather disturbances certainly affect the commodities markets. The geopolitical landscape is certainly affecting the commodities markets, and who knows? It's a crazy world we live in. That's for sure.
Where do you want to start?
I don't know where to start. I mean, there's so much to talk about.
Not that we trade orange juice, folks, but orange juice is just almost up limit today. It was 0.1% of one away from up limit. So.
Right. And you had other limit moves today. Cotton limit up because of the cotton crop. Cotton crop in Texas, a lot of it was wiped out.
Look at that.
And we're going to hit this Irma is going to hit a lot of cotton growing areas here. It's going to go up the East Coast, and that's south. There's a lot of cotton growing there, and that's not good. I think cotton's headed for over 80 cents a pound here. Also, limit up today, lumber.
Really?
Oh, limit up? Yeah, so there's a lot of action going on in commodities here, like you can't believe. And certainly, we don't even have to mention, everyone knows what's going on in the precious metals markets. You had palladium almost trade 1,000 today, and then it backed off. You got gold pushing up against 1350. This thing looks like it's going to go through 1377.50 like a hot knife through butter, go straight to 1428, in my opinion.
Yeah, listen, it's strong, there's no doubt. Well,
very strong.
Poor platinum, man. What's going on with platinum?
You know what? Eventually, platinum's going to catch a bid. It's back over 1,000. It's going to catch a bid. You know, when the others become too expensive to buy, people are going to turn and say, "What do I buy? Oh, here's platinum.
Isn't
Let's
it
buy
so
that."
weird, though, man? It really is. And folks, the reason I'm saying it's so weird. Listen, I love platinum, and I'm not selling my platinum. And I swap my gold for my platinum.
But I love it.
But it is really strange when you see a move like this and platinum doesn't move, man. I mean, it's like,
well, dog lovers of the world unite. But the one I think that's preparing, that's like a tightly coiled spring here, is silver.
Yeah.
I think silver, I think we're going to come in. I don't know when it's going to happen. I think we're going to come in. We're going to see silver with a 19 handle very quickly. Very quickly.
Well, the 1887, which is the April 17th high, I mean, it looks like that's what gold's going for. It's no reason.
I think you get above 1887, it gets you 21.
Yeah. That would be nice.
That's kind of the way it feels here. Copper's bumping up against that 320 level. That could run into some resistance, but these industrial commodities, whether it's copper, whether it's aluminum, nickel, lead, zinc, tin, even oil today showing. We talked about oil last week when it was under pressure. Today we're seeing kind of a reversal of the trade with the products coming lower and the oil going higher. So that's a reversal of the trade. But I think oil's got a real good chance to go right through 50 and maybe even to 55 here, based on what I'm seeing in the oil market.
It's going to, I mean, if this storm gets into the Gulf, and I keep hearing everyone say that it's going up the East Coast, but every time I look at this NOAA map, this looks to me like it's going on the more west than east.
Let me tell you something. Only Mother Nature knows where this storm is going.
Yeah, well,
that's the thing with these things. These things are crazy, there's a lot of warm water in that Gulf of Mexico, man. If it goes over that warm weather in the Gulf, it could be nasty. Because this one, Harvey was a wet storm. This one is a windstorm, and this one could do real damage. I mean, Harvey did real damage, no question about it. It was a 500-year flood, horrible situation.
Sure.
But the devastation of those Category 5 winds. There's nothing quite like it.
No, there's no doubt. There's...
And, and all the while, we have North Korea, which is probably going to fire another salvo this week because they got Founders Day coming up.
Yeah, September 9th, right?
Right.
September 9th.
And that's very worrying where they're going to target this time. I have a feeling with the rhetoric, they're going to go towards Guam, which won't be a pretty picture. It's just not a pretty picture.
Yeah.
So, I don't, the leaders of this world, I don't understand what's in their heads. There's got to be a better way.
Well, what's interesting? So I remember, you probably may remember too, it's going to be intriguing to find out how this thing whole shakes out, because I remember... Do you remember when India and Pakistan, these guys were just getting all the nuclear weapons, and for years they kept saying, no, you're going to get rid of them, and then all of a sudden that was gone. Then they both have them. So it's like, guess what? Once you get to that point, bottom line is, what are you going to do?
I know, but
you're not going to do much.
This guy there is different than all other world leaders. I think you'd agree with that.
Oh, I do. I do.
Yeah, he's a little, he's a little off center, and this whole country's a little off center, and this whole country, they start their calendar the day that the grandfather was born. They're in like year 126 or something.
Wild,
it's a strange, really strange place, Tom. And it's very, very, very very upsetting. We'll see. We'll see how it plays out. But there's a lot more nervousness.
It's serious business. You know what's crazy, though? Hey, when we come back, we'll talk about it. The market is saying nothing's going to happen because I was looking at the Korean market while this was happening. The Korean market didn't even take a hit.
I know.
It's like, okay. So Stay right there, folks. Andy and I are coming right back. We had the Dow Industrials finish down 234. NASDAQ up 59. S&P's down 14.5. We're going to be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're talking with our man, Mr. Andy Hecht. We are talking markets, we're talking commodities, and just coming across the Bloomberg, you're going to love this one. This is like a trip in itself because we're dealing with the debt ceiling. You're going to be dealing with a lot of things when Congress comes back tomorrow for all of 12 days, which is a joke in itself. Anyway, with Texas still reeling from Hurricane Harvey, the FEMA, Federal Emergency Management Agency, is expected to run out of money this Friday. Yes, you heard that right, folks, this Friday. They, as of 10 a.m. Tuesday morning, FEMA had $1.01 billion on hand, but $541 million of that was already available for Hurricane Harvey. And they expect that right now they're spending at the rate of $9.3 million an hour, $155,000 a minute, which gets down to zero Friday, and today's Tuesday. So we'll see whether they can get anything done, Andy.
It's like a perfect storm, isn't it? Look at all this stuff going on, and this guy's firing off these nukes. It's almost like a perfect storm.
It is. Yeah, it is. There's no doubt. There's no doubt.
Is. So that's why gold, silver, palladium, and platinum eventually. Hey, these things look the best that I've seen them look in a long time.
They're good moves. The equities move good. They move with price. They move with volume. The GDX, the HUI,
it's looking firm.
Yeah.
You also got the bonds going up. You got the dollar. By the way, that's giving the term "dead cat bounce" a whole new meaning.
It is.
That dollar. That dollar.
And what Andy means there, folks, the dollar has not. Normally, listen, you can go down in price for a long period of time, but normally you get something going, And the dollar, folks, it has not caught a bid at all since at least May 11th. It was 99.56. Before that, I come down to 103, but then you had a decent bounce. You went from 98.515 up to a 101. But since then, guess what? I mean, they just keep selling it, man.
It's been a one-way street. I mean, every rally is a sale. Someone's leaning into this on every rally.
Yeah.
And, usually you have the administration at least, squawking about a strong dollar policy. This administration's going the other way. They're actually talking it down. So, and you have the German election on September 24th. Merkel's going to win. That's going to give another shot in the arm to the euro. And you're going to have Draghi sooner rather than later announce tapering of their QE policy, which is going to give the euro a shot in the arm. So I don't really see too many bullish things for the dollar here. I mean, even the flight to quality. People are running to bonds. They're running to gold. They're running to the yen. They're not running to the dollar.
Well, the thing that is pretty wild is that, I was reading this a little bit earlier. So Kashkari, Neil Kashkari there, he came out today, and so here's his quote. Federal Reserve interest rates may be doing real harm to the U.S. economy, which would explain why inflation is low and the job growth has slowed, said the Minneapolis Fed president, Neil Kashkari, one of the central bank's most dovish policymakers. The thing that's really crazy, if 2 rate hikes of only 0.25% apiece can do something to the economy.
Oh, then it's weak. Then it's very fundamentally weak.
It's like, what are you talking about, man? Listen, I think we're all hooked on this low interest rate. I'm not saying that. But it doesn't seem to me that, well, let's put it this way. If, in fact, that happens, then there's something else that I don't see at all.
I'll tell you, I think what's real BS here is how they measure inflation. They should measure it by the basket of food.
Yeah.
I don't know.
I agree.
My grocery bill goes up all the time. My power bill goes up. My electric bill, my gas bill goes up every month.
It does.
So inflation, they're looking at the way they measure it, which they've been doing for how many decades. They're not changing with the times. So I really don't think they'll.
I agree, man. I agree. There's no doubt that food, electricity, education, energy is getting higher. Now, with that said, I don't know if you check this out, folks, where you're living, but where we're living in Florida, I went to Publix yesterday, right? I was getting a bunch of stuff, and it blew my mind, Andy, right? I never saw so many buy one, get one free, that things you actually can use. And I says, oh, look at this. This is the Amazon effect for Whole Foods, because Amazon got so much publicity last week, and I didn't go to Whole Foods yet, but I plan on it. But it was awesome, man.
We have Albertsons here. We get it all the time. You buy one steak, you get 3 free. You get all this. They're definitely competing. Amazon, they're doing a great service. They're driving down the margins.
Yeah, they are.
No question.
Amazing.
They are driving down the margins. So, it's wild. The other thing I wanted to point out, natural gas coming down. And let me explain why that's happening.
Let's look at natural gas. Okay, so
that's happening because this storm will cool things off. So air conditioning demand, power demand is going to go down. And also, when the power goes out, power demand becomes non-existent.
Yeah, right.
So, that's what's happening here. So, but be very careful there in natural gas, because if it does go into the Gulf and it does affect infrastructure, this thing can turn around and double in price very quickly. So, this is a dangerous storm. And with those kinds of winds, infrastructure becomes a target, especially in places like Arath, Louisiana.
Oh, it does.
And the shipping ports where they're sending out the LNG and all that stuff, you could have some serious problems there. Look, we got a taste of what it was like in gasoline. I know the prices are coming down today, but You saw what happened last week. Crack spreads, $28, up from 14. You had a doubling. You know, very, very quickly, we could have whipsaw things going on in these markets. And be very careful when you approach these markets now. Have your stops tight and take profits when they're on the table, because those profits can turn around like in the blink of an eye, based on weather, based on geopolitical events. You know, we got so many things coming with us. You basically got to wear a protect, like a catcher's mask these days, trading.
Yeah, and you know, when Andy was just bringing out, the stops are always important, folks. And if you are trading really future products, I would suggest that you put your buys in, always have a stop, but put your sells in too, because you know the reality, they're moving that quick. Do you know what I mean?
Right.
That, you know, you can't sit there and just keep bringing them up or bringing them down, because they're going to get hit.
Exactly. And when you get on the right side of a market, use the trailing stops. You know, protect your capital.
Right.
Raise those stops as the price goes higher. If you're long something like silver at much lower prices, keep raising that stop, because you never want to turn a juicy profit into a loss. That's the cardinal sin of trading.
Yeah, a juicy profit into a loss.
Right. Exactly.
Oh, man.
I kind of like coffee here. I'm kind of looking at that one. That looks kind of interesting to me, because that hasn't started to move yet. You know, I'm trying to pick out little diamonds in the rough in these markets. It's very hard to buy gold and silver here. I mean, I really liked them a couple of weeks ago. I know you did too. I hate buying rallies. I'm much more comfortable buying dips and going counter trend. Here again, I'm running my stops up. I keep pushing my stops up on these things. You know, copper is certainly not a bargain. Neither are any of the industrials.
Yeah, that's sold off from that high today. You know, but it's about time. I mean, you know.
Well, it's sold off to 312. I mean, we've moved from 280, which was the breakout point, like almost 40 cents.
I mean, that's huge, folks. Huge.
Amazing. Yeah.
Okay, well, listen, man, we appreciate all the education. We look forward to the show in 20 minutes.
Thanks, Tom.
Thank you, man. You stay right there, folks. I'll be coming back. Andy's going to be coming back at 5 o'clock. Remember, get us 24 hours a day. TFNN.com, right on your cell phone. Hit Tiger TV.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. And if you are in Florida, folks, you better make those preparations because bottom line, it's better safe than sorry. As there's no doubt that's a cliche, but guess what? These winds, man. So they've already clocked them at 185, and that's the highest measure in the 5-step basically scale. It's on the track right now to graze the Caribbean islands from Antigua to Puerto Rico through Wednesday, Cuba by Friday. So hey, we're gonna know where this is at bottom line on Friday. There's no doubt about that. Yeah, and hopefully, hey, it doesn't look well. Hopefully, some kind of high pressure comes down and pushes us out to the ocean. But every time that I look at this cone that's coming in, it keeps getting closer and closer and closer, and it doesn't. Right now, in fact, let's see the scale. You know, when you take a look at the scale, you get the tip of Florida. I mean, it almost looks like the tip of Florida, yeah, would be hit within about another 48 hours. So, you know, when you look at the actual cone, however, it's not even close. It's saying it doesn't even come up, you know, to the tip of Florida until Sunday at 8 a.m. You know, so bottom line, you know, get protected because. And yes, we don't want that thing in the Gulf. That thing comes in the Gulf and get out of the way, man, because what does happen is that the Gulf is like a magnet, folks. It's a magnet, and what it does, it just pulls it right up. And the water, I can tell you right now, is bath water inside the Gulf. I mean, in a huge way, too. You're talking about almost 90 degrees. The fish have to go out further in the Gulf because they can't stand it that hot either. Okay, banks out here gave it up today. Let's go into the XLE, the energy sector. And the energy sector has been saying for quite some time that bottom line, oil is going to continue to lower price. The energy sector finally got a bounce starting the 21st of August. Right now it's 63.93. And the energy sector did finally get basically some volume in it today, the XLE. With the XLE got back inside a higher range, which is 63.64. We did 63.93. And that's saying it's going to have a shot to go to the 67.12 area. If we put this on a weekly, what you're going to see, this is a one-way trade. $78 is the high. The energy sector, meaning XAU, not the ExxonMobil, Chevron, they've been going down since December of 2016. One way, straight down. We'll see what kind of a bounce it can get going. If we go take a look at ExxonMobil, Exxon out here, that just went from 83 down to 76. You get a slight bounce. That still doesn't look any good. Chevron, which was stronger. Yeah, Chevron's not bad. So Chevron is up here at 109.44. So there's definitely a differential between the Exxon and Chevron. And if we take a look at, let me just look at the size of these. So Exxon is the largest weighting structure. Exxon does $260 billion a year. Chevron is the second largest weighting inside the XLE, and that does, it's half the size of it, $135 billion. So bottom line, the biggest equity out there, it is having a tough time. If we go over to Goldman, Goldman rang the bell at 255, folks. Now, that was the leader of the Dow Industrials on the way down today, too, by the way. And what you have with Goldman, Goldman's trading 217, going after the low of this consolidation of 209. And if we break 209, then you're going to see big action. Then, 186 is on the agenda. What we did do today, just barely, though, we did it by a point. We got back inside the lower range. Anything inside of 217.77 gets you back in the lower range. The bottom of that consolidation is still important, though, which is 209. The reason it's so important is that Goldman has big strength in November. And all of these, just so you can understand, all of these trades that were successful, well, I don't know if they were successful. It depends whether they got out of them or not. From November 7th, have turned the other way. If you take a look at the peso bottom line has gone from 22 pesos to $1 US in January. Now you're at 17.89. The 17.89, by the way, is even stronger than before the election. So, yeah, that is saying quite a bit. What I'd love to really have figured out, what I can't quite figure out at this particular point, it seems that the economy is going fine. The sell-off on the dollar is dramatic, and fundamentally, if you have a strong economy, you'd have a strong, you'd have a strong dollar. You just have a strong currency. That's what it comes down to. And what we might have here, which would be really pretty intense, we have the debt ceiling coming up, and, the market was looking like, okay, is that where we're going to have the fights? Well, we might just have the fights, folks, about how much is going to get put into Texas. If this other storm comes in, how much is going to get put here before we even get to the debt ceiling? And that is going to really throw a spike into things, because just when I read when Andy was on there about the FEMA, bottom line, they're going to have to come up with that. And this is going to drive some of these congressmen out of their minds that they got to come up with anything, until their state gets hit. The Texas deal, you talk about hypocrisy. That's about as good as you can get. They both voted against Sandy. Now they're going to be out there, of course, saying we need the money. Of course, they're going to get the money, but hypocrisy is the name of the game there. This one here, we'll see how fast they come up with more money for FEMA, because if they're out of money on Friday, when you're talking about bureaucracies, bureaucracy will just stop. That's it, because someone has to sign off for it. And guess what? If you sign off for something, and the Fed or any type of bureaucracy, and the money's not there. Oh, really? Yeah. So this one here is saying that the bottom line, by Friday morning, FEMA will be out of money. So I suspect they're going to put it in. The real question is going to be, how much do they put into FEMA, and what are the basically ties that go with that? What we did out here, you did have the expansion of volume. We went to lower price out here today. The NYSE did 900 million, and that's quite an expansion of volume. The NASDAQ Composite did 1.8 billion. That's a decent expansion of volume. Small caps, though, didn't come down with volume. We did 21 million in the small caps. SPY really didn't come down with that much volume. We did 89 million. Now the Qs did. The NDX 100, that had hit the highs. The Qs did. The Qs did 45 million. So bottom line, I'd say that once again, you get the Qs, they want lower price. And they tested, they finished at an all-time high of Friday. Come down off the high volume, now under 143.90, which is another 70 cents down. That will put you, that it goes to 135, and that's the big hit. You stay right there, folks. We'll be coming back with a roundup, and of course, we got our man, Mr. Andy Heck, coming right up at 5 o'clock. Dow finished down 234, NASDAQ off 59, S&P's down 13.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And, you know, it's intriguing as to, you know, it's always a speculation as to what sells the market down. My take is that it's always about supply and demand. If we go to the cool thing, so the cool thing here is that if you trust markets, okay, and if you go to the Cosby in Korea, what you're going to look at as all that, you know, basically the hydrogen bomb, the saber rattling, all of the above, the markets over there, folks, okay, didn't take a hit. You know, it's pretty amazing, actually. The market had closed at 23.57, and when the market opened back up, it's 23.29. You know, and that I like that indication. In the context that, guess what, that market is saying that, you know, there is not going to be a blow up. Yeah, I suspect there's going to be the saber rattling. That's not going to stop anytime soon. And what you are going to have is that that whole deal about Founders Day. They're probably getting ready to do send another missile up. But when you look at the market is not saying it's going to fall apart. In fact, the thing that's pretty amazing, actually, is that when you actually do look at these markets, our S&P looks worse than the Cosby, which is pretty wild, you know. And when I talk about it, I'm talking about price, I'm talking about volume, and you know where these things are. Because if I take this and I put the volume right underneath it, what you're going to see is You know, we did come down on volume. You know, a slight expansion, but it was going right into where the last time it had volume actually, well, second last time on the way up. But it doesn't look that bad. It looks like 23.23, and we're at 23.26. That looks like you get some heavy support there. Until we break that support, that's saying that, you know, over in the South Korea markets, that guess what? They're stable. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Have a blast with it. Stay right there. Andy's coming right up. TFNN.com. Hit Tiger TV. Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.